Julian, this downside that Morgan Stanley's looking for, led by Mike Wilson, 3,000 to 3,300 on the S&P 500 at some point early next year. Are you going to wait around for that?
Look, if that happens, it's likely to be later rather than earlier next year, because if you go back to earnings, John, here's the thing. The buy side has stopped listening to bottoms-up sell-side estimates, okay? That's why stocks have rallied through this earnings season. That's why stocks rallied in the July earnings season, even as the numbers came down. And the interesting thing is, when you look at next year, the bottoms up for the S&P is around 230. Our number is 221.5, which is roughly unchanged year on year. But the buy side is actually forecasting 205 to 210. And so from our point of view, when you think about the fact that GDP is tracking at 4% for the fourth quarter after a positive last quarter, it's entirely possible that this recession is either going to be extremely shallow or not at all, and that earnings estimates in terms of viewpoint from the buy side are going to need to be revised higher, which supports the bullish equity case.
Equities right now down 0.4% on the S&P. On the Nasdaq 100, we're down by 1 full percentage point. This from Citi overnight, led by Stuart Kaiser. Timing is the key word for markets. For data, will inflation crest before growth deteriorates, and let the FOMC deal with those risks to its mandate separately? Can I come to you on that, Julian? Just the sequencing of what rolls over first, inflation or growth, and what it means for how the Federal Reserve is going to handle things next year.
So we're actually seeing inflation start to roll over first because, factually, Ed Hyman called for the peak and the turn down in inflation in the middle of the summer. I think part of the reason that you had that response to last week's CPI report was that the market had its aha moment that is actually happening, and yet growth seems to be holding in. The question for us is it a pause or is it a pivot? It's not a pivot, okay? So the futures curve is pricing in rate cuts later next year. Those likely aren't going to happen, and at some point the market's going to have to accept that reality.